The SEC is finally saying out loud something that Cardano has been building for years. This is going to seem like a radical, out of left field sentiment for some ecosystems, but it turns out to get treatment as a crypto platform or a crypto asset, you're actually going to have to be decentralized. If the only treatment you're really interested in is the tax treatment you get when you go to sell your bags, or if you're finding value in these videos, please consider delegating to the Army of Spies DRep address and the Army of Spies stake pool, ticker AOS. All right. Thank you for joining. Thank you for being here, everybody. Let's see who we've got in the comments. Neo Chad was first. Let's go, Neo Chad. Daniil is here, has been the GOAT. Adam Olson says Bloodsport versus Kickboxer. I would say Bloodsport was the one that is like almost the most memorable, but in terms of like what was more impactful, probably Kickboxer, to be honest with you. Bloodsport, I mean, the Kumite ramp will forever be burned in my memory, but Kickboxer probably actually more impactful for me. Emilio, let's go. Now, on those two, so this is a little bit before my time. So I've seen both Game of Death and The Last Dragon. The Last Dragon, was that the actual name of the one with the mirrors and the guy? Was that the one? Or was that the name of the remake with Jason Scott Lee? I'm trying to remember the names. Game of Death, I've definitely seen. That was the one with the yellow jumpsuit and he's in the giant pagoda thing. He fights, does he fight Kareem Abdul-Jabbar? Who does he fight? A super tall basketball player. Who was it? Mission Zambia, good morning. Thanks for joining. No, Reddit. I hardly ever get a chance to check my Reddit messages. X is definitely, I love Reddit. I really appreciate Reddit, but I definitely am able to check my X messages much more often. So definitely hit me on X if you want to send me a message. So feel free. Okay, let's see. Pucky Hawk is here and early. Good evening. Otis Frichov, good evening. Let's go. Hola, Rulo. Jolly Frog. Hello, welcome. Thank you for being here. David M. Jensen is here. Yo, welcome. Dave P is here. Let's go. Satsa is here. Thank you for joining from Bulgaria. Thank you for joining. Twig is here. Let's go, Satsa. Wait, what decentralized? Never heard of that before. Yeah, I swear to God, some of our competitor ecosystems are just like, we didn't think we were doing that anymore. Was that supposed to be a part of it? We just didn't do that. We skipped that because it seemed completely unnecessary. That's what I think is going on here. James Syracuse is here. Patrick Stewart is here. Thanks for joining, Patrick. Hilldog is here. Sir James says it'll be interesting to see how the MSB passes and whatever the decentralization requirements need to be. Lummis told us decentralization matters. Charles has been ahead of them. Yep. So Sir James is referencing the market structure bill, which is what we've kind of been calling the Senate version of the Clarity Act, and we can talk about that. Pucky Hawk says, I just bought a Tangem wallet and figured out I can't stake Cardano on it, so I'm kind of sad, but this wallet is pretty cool anyway. Yeah, obviously I'm aware of the Tangem wallet, but I haven't ever used it, and I don't know anybody who's used it, so I wasn't even aware about the staking issue you're talking about. Yeah, I'd be curious to hear what's actually going on there. D9U, thank you for that. I appreciate it. All right, let's jump in. So obviously, if you've been around the internet over the last 10 years, you know that this thumbnail is based on a certain meme. It's based on a certain meme. In fact, we can just jump ahead and look at it right now. There's a better place where we'll look at it, but it's based on this meme, right? One astronaut is somehow just floating in space without a tether, saying, wait, it's decentralization. The other astronaut says, always has been. So this meme is used for a lot of different things, but I think this is basically where we are. We've got all these ecosystems that sort of, they were like, yeah, crypto, decentralization, yeah, totally. And then they just built out scaling. They just built out scaling and did the whole casino thing because the scaling is required to be the best casino. But things are about to change. Today, the SEC was actually saying out loud what Cardano has been screaming since 2017. So I think things are about to change. The other foot is about to fall here. Satsa says, what is your take on Ergo's part in the future of Cardano? You know, I've never known too much about Ergo. Everyone I've ever talked to who's looked closely at Ergo has told me it's very, very impressive technology. Every commentary I've ever heard on Ergo said it's very impressive technology. I just haven't had occasion to really learn that much about Ergo at any point in the past, so I can't really comment on what I think Ergo's part in the future of Cardano is. I'm just unqualified to comment on Ergo, and part of that's just because I've focused super strongly on Cardano, and now obviously on Midnight. It's just kind of where my interests have taken me. But I've only ever heard very positive things about Ergo. That's one thing I can't say. The government just made a crypto site, Bit something. Yeah, please look that up, Pucky Hawk. I'd like to know what that site is. I'd love to know what that is. So this is what's been going on, because I mean, like, if you were just trying to get the most adoption, yep, Ergo is responsible for building the Rosen Bridge. That I am aware of. The Rosen Bridge I am aware of. That part I do know. If you were just trying to get the most adoption over the last 10 years, you know, or even let's just say the last 4 years, the last 5 years, definitely what Cardano has done, and that's build for decentralization, was not the ticket. That was not the thing to do if all you cared about was adoption, because the ticket, the train you wanted to be on for maximum use, I won't even say adoption, because I think it was sort of not really adoption, but just temporary adoption, just people going where things were easiest for what they want to do. The train you wanted to be on was the casino speculation train, and you didn't need decentralization for that. In fact, decentralization hurt you in that regard. And there was no regulator, no one in the government saying, hey, we're going to draw a line in the sand between decentralization and not decentralization. Instead, what we had the anti-crypto army and Gary Gensler just saying all of crypto is illegal. Come on in and talk to us so we can arrest you. Come on in and talk to us so we can lay massive fines on you and sue you. That's what happened. It's just like, if you were in crypto and they could find a good way to sue you, to lay out an enforcement action against you, they were going to do it no matter what, because the agenda was anti-crypto. It wasn't let's reasonably regulate crypto. It was just anti-crypto. So it didn't even matter if you were decentralized or not. What mattered was just that you basically made as much money as you could, because if you had any interaction with the SEC, it was going to be negative. It was going to be an enforcement action if you had any interaction with them at all. So it was sort of just like the herd of gazelle running past the bush. And everybody knows there's a lion behind the bush, but the lion can only kill and eat so many gazelle from the herd. So the entire herd is just running as fast as possible past the bush, and everybody's just hoping the lion, like grabs their neighbor and devours their neighbor, and they're able to keep running with the herd, and it's not like, it wasn't like, hey, maybe we shouldn't run past the bush. It was just sort of like, everybody's running past the bush. Let's go past the bush. We won't get caught. And that actually worked for a lot of projects. But things are changing now. Things are changing. There's something brand new going on. The SEC is saying something brand new today, and we're going to cover that in a second. But first, let's cover what everybody's actually thinking about. And this is it. So today we saw some new information from Midnight. We saw this post, which was a little confusing. I'm not going to lie. This was a little bit confusing. So Pucky Hawk has the name of that. The new government crypto site is called Bitnomial. It comes out next week. That's a little bit weird for a government. That's a weird name for a government site. Are you sure? What government is that? What government put that out? Bitnomial. That sounds more like a company to me than a government site. But this is a weird administration, so they could be doing anything. Okay, so this thread did come out, though. It was a little bit confusing because they said Night is officially live. And I think a lot of people were probably like me. They were like, wait a second, Night, what are we talking about? The network doesn't really go live until 2026. The night token on Cardano doesn't go live until next week. So what is going live here? What are we talking about here? So here's the thread. You come to the thread and they say the network's native token has officially launched as a Cardano native asset. So then you get a little excited. You read that part and you're like, wait a second. Are people actually getting, are we, the public, actually getting our 25% tranches already? That wasn't supposed to be till next week. That's not what they mean, apparently. When they say the native token has officially launched, that's not what they're talking about. They say launching Night on Cardano provides immediate access and liquidity while we continue building. This phased community first approach ensures ecosystem resilience, blah, 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 blah. So they're not talking about us getting our tranches, or otherwise people would be all over Cardano X talking about getting their 25% tranches. It sounds more like they're talking about just the minting of the token, which we kind of already knew happened. That was reported a couple days ago. They say once Midnight mainnet launches, Night's total supply will be mirrored onto the Midnight ledger. This I didn't know about. People asked this question, how this was going to work. This I didn't know. So Night's total supply, the Night token's total supply, will be mirrored on the Midnight ledger, creating a single multi-chain asset that circulating supply exists on both Midnight and Cardano. How that's going to work, I don't know. I don't know if that's just to accomplish sort of some kind of a bridge back and forth. You know, how can it exist simultaneously on both chains? You know, if you spend it on one chain, are you spending it on the other? How is this going to work? Those details I haven't seen yet. So they say this launch enables the countdown for the redemption process for over 4.5 billion tokens. So they're basically telling us, hey, this is just the beginning of the countdown for the thaw. The thaw is the part where we're getting all these tokens. They remind us there's 4 phases. They have these phases: Hilo, Kukolu, Mohalo, and Ua. And here's when they happen. This month, Q1 of next year, Q2 of next year, and Q3 of next year. So pretty easy to remember. What you should know about Night. They tell you a few things about Night. And then they get down to the part that everybody's probably going to be interested in. They're saying, hey, by the way, here's a blog that'll tell you how you actually get your Night tokens. And then they try to hype you up, but this is just the beginning. With Night now live, we're unlocking new possibilities for the community and moving one step closer to a blah, 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 decentralized privacy first future. Okay, that's all great. Let's go to the blog and see what the blog says. So the blog recites a bunch of information we already know, but also gives us some important new information. So they remind us how all this worked, how the glacier drop claim worked, how the scavenger mine worked, how the lost and found is going to work. And they do tell us some new things. So the rebalancing of the scavenger mine means the lost and found apportionment was reduced to 252 million Night. So that extra boost they gave us during the scavenger mine, that came out of the lost and found stage. Remember, we went from 626 million available during the scavenger mine to 1 billion. The way they pulled that off was they reduced the amount that would be available during the lost and found. So if you did not claim your tokens during the glacier drop claim, there's going to be less available for you during the lost and found now, which is, you know, sad for those people, good for us who claimed and then were in the lost and found. So I do feel bad for the people who were hoping to get more during the lost and found, who might have missed the glacier drop claim. I actually know some people in that camp, and I feel bad for them. So then they come down here and they show the exact numbers. Glacier drop claim, no change. Scavenger mine went from 626 to 1 billion. Lost and found went from 626 million down to 252. So that's how that all worked. Then they give us a little bit of a roadmap. They remind us once again, Hilo is here with the launch of the token. Kukolu is next, then Mohalu, then Ua. So, and they give us some, you know, quick little summaries of what's happening in each of those eras. We've talked about that quite a bit already, so we won't go back over that right now. Then they remind us each allocation unlocks in 4 equal installments. You already know that. You get 25% tranches, and it's randomized. You could get it on any of the days from the very first day it's available, which it turns out is going to be December 10th. We'd previously been told December 8th. It turns out in this document, we're getting a new date 2 days later, December 10th. Every destination address is assigned a random first day between December 10th and March 2026 of next year. This is a 90-day window. And then whatever day your unlock falls on, your next unlock will happen 90 days after that. Then your next unlock will happen 90 days after that. Then your final unlock 90 days after that. There's 4 tranches of 25% each. So they do mention this. This is something that piqued my interest. On December 4th, that's today, Night will be transferred to core network constituents and the redemption smart contracts. What are core network constituents? What does that mean? Who is that going? Who is getting their Night tokens today? That's what I want to know. Who is it? Who are these core network constituents who are getting their Night tokens today? I'm guessing the Midnight Foundation. But I would love to know. I wish they would have told us. Who are you talking about here? I don't know what that means. Who is a core network constituent? I wish they just would have told us who this is. It makes sense. The United tokens have to be transferred to the redemption smart contracts. That's got to happen sometime in between minting and the 10th when people start getting them. But who is this who also got their tokens today? So I'm not saying there's anything wrong with it. I just would love to know. So they do tell us the end date. The thawing period will end on November 29th, 2026. So you can tell, it's a 360-day period. So obviously it's going to be over by this time next year. Here's the important part. Here's the part you actually want to know. How are you actually going to redeem your tokens? So you can do this using the address, using your destination address. They say connect to the portal. You can either just connect your wallet or you can manually enter the destination address. And then you will get some information that I was glad to see. You'll get your total allocation, good, and your specific thaw schedule. So this is good. So the way I'm reading this is as soon as this all goes live, which down below they're going to tell us that'll be shortly before the token goes live. This will all go live. We'll be able to go in there, plug in our addresses, our destination addresses where we have allocations coming to us, and then we'll get our specific thaw schedule. I was afraid we were going to go through this thing for like 90 days where we were having to check all of our addresses every single day to see if we got our allocation yet. Apparently, the way I'm reading this, we're going to be able to go to the website, which is, we'll actually look at it in a second. It's not this address. It's going to be this address /redeem. I think redeem.midnight.gd also works, but midnight.gd/redeem is the one they're going to give us in this document. And it sounds like based on this, your specific thaw schedule, they're going to tell us what day we unlock. So hopefully on the 10th or shortly before that, we'll find out what day we're going to unlock, which is great. And then they tell you how to initiate the redemption. If you have tokens available, click the redeem button. And this is also very, very convenient. I was glad to see this. You don't have to have the ADA in the destination address to pay the fees. There's this on behalf of feature. The protocol allows any wallet to pay the fee for redemption. This means if your destination wallet is cold storage or empty of ADA, you can connect a different wallet just to pay the gas fees. The Night tokens will always be sent to the correct destination address, regardless of who pays the fees. So if you've got a bunch of ADA sitting in a wallet, you can use that wallet to pay all of your gas fees for all of your Glacier Drop destination addresses, which is great. Then they say you're just going to authorize the transaction, and then your Night tokens will appear. So this sounds great. There's also going to be an API for power users, as they put it, developers and power users who want to automate this workflow. So there's going to be people doing a lot of automated claiming. The redemption portal will open shortly before the December 10th date here. So you can see here, you can't see it because of where we've got the comments currently. I'm going to take that comment down, hopefully so that you can see. But let's see if it's popping up for you guys. Okay, you guys still can't see it. But when I put my cursor on that here, the address it's giving me is www.midnight.gd/redeem. So we'll go to that address in just a second. But that's going to be the redemption portal. So here's that address. midnight.gd/redeem. And there's nothing there. The claim portal is not quite open yet, but as they put it, shortly before things go live on the 10th, we'll be able to go in here and hopefully get our thaw schedule, which sounds great to me. So let's see what people have to say here. Pucky Hawk says that Bitnomial site is a government-sponsored crypto site. Not sure on the details yet. I literally just learned about it. Oh, thank you for the news then. Thank you for that news. James Syracuse says, I 100% feel like Social Security is basically for the people. Basically for the people. It should be on a blockchain with transparency so they can't be stealing the funds for their little black budgets and fake investments. Yeah, I think the transparency of a blockchain is great for things that you don't want people embezzling. I think it's a great anti-embezzlement tool because anybody can audit the ledger. So I agree. That's a great use case for blockchains. Yep. Otis Frichov agrees, says, I think that will be the plan eventually. Pucky Hawk says, the site is there. I'm copying, pasting here. Bitnomial subsidiaries are regulated by the US CFTC as a designated contract market. Oh, so this is a CFTC contract market. Okay, so Bitnomial is a CFTC contract market. So it's like a commodities or futures market. So futures are, yeah. Anyways, it's a futures or commodities market because we have commodities that aren't futures. So we don't need to get bogged down in those definitions. Okay, and they are also a futures commission merchant. Okay, cool. Manuel Benitez Peralta says, I think that things in life that come as a gift must be held for life. I won't sell. That's a nice sentiment. It's a nice sentiment. I like that. Brian Packard, good evening. Good evening. Pucky Hawk says there is an idea that came up to be able to opt out of Social Security and put that money in a Trump fund. Not sure how much traction that has. That'd be interesting. If all of your Social Security earnings could go into, I mean, the problem is though, demographically, there won't be Social Security. Like the baby boomers will collect Social Security in the US, but like my generation, Gen X, will not. So, or if we do, it's like very, very, it's not the same amount. It's very reduced amount. So I'm not sure. I think they're kind of like, even though everybody knows mathematically that's the case, I think they're trying to keep that sort of close to the vest, right? They're not trying to make that apparent to everybody. And if everybody could put their Social Security into a Trump type fund, like invested in the markets, then it'd be super apparent how much you're not getting. That might cause some problems, some generational strife. Otis Freechov says, interesting if that is the case. I'd be interested in that. If the numbers make sense, my luck, they would base the funds in ETH. Yeah, for real though. Okay. US debt clock should be on the blockchain, so it's immutable. Yeah. Adam Olson says he's a master plumber working on the AI plumbing. Okay. So moving on, let's get to the thumbnail. Let's talk about the thing in the thumbnail. So this is Paul Atkins, the most pro crypto SEC chair we've ever had. He might be the most pro crypto SEC chair we'll ever have, but now's a good time. If you are in crypto, now's a good time to have this SEC. He says, today I joined the fourth and final Investor Advisory Committee meeting of 2025. I'm grateful for the committee's dedicated service. And he gives us his remarks, which we're going to look at. But I wanted to hit a few things he's saying here. As we consider the rise of public blockchains and tokenization, and remember this, the SEC is thinking a lot about tokenization because that's what Wall Street is thinking a lot about right now. Tokenization is the big game to them. We must acknowledge that these technologies have the capacity to streamline not only trading, but the entire issuer-investor relationship. In other words, tokenization is not just about transforming how trades occur. It can also enable direct connectivity for proxy voting, dividend payments, and shareholder communications, reducing the need for intermediaries. So this is amazing because he's thinking about the right things, right? A lot of people who've been a part of the TradFi world, you say tokenization to them, and they don't think about the really interesting mechanical things like this, like proxy voting. Proxy voting on the blockchain is like perfect for this, right? It's perfect for corporate voting like this. Dividend payments, again, perfect. The blockchain would be a great tool to distribute dividend payments, shareholder communications, right? It's just, you just have an address. You have an address for everybody. If we want to boost innovation, investment, and jobs here in the United States, we must provide compliant pathways that allow market participants to leverage the unique capabilities of this new technology. So this is exactly what the last SEC did not provide, compliant pathways. They were like, yes, come in and talk to us, and that will allow us to more efficiently file our enforcement action against you. That'll be the basis of our enforcement action. Here he gets into the important part that we'll go into a bit more in his actual comments. A thoughtful exemptive framework, cabined, time-limited, transparent, and anchored in strong investor protections could allow the markets to develop on-chain models and give investors innovative new choices. The SEC's role, and here he's telling you what he thinks the SEC should be doing with this whole blockchain thing, this whole crypto thing. The SEC's role is not to resist the market's transition to on-chain capital markets, nor to force it into legacy definitions. You'll remember yesterday we read that Citadel letter where Citadel was saying exactly the opposite of this. They were saying, hey, you need to force these crypto guys into TradFi definitions. Are they exchanges or broker-dealers? Citadel was basically just presuming they had to be one or the other. Here, Paul Atkins is basically rebuking Citadel. He's going in the exact opposite direction. Okay, maybe not rebuking Citadel, but he's going in exactly the opposite direction. Citadel was like, they must be broker-dealers or exchanges. And he's saying, actually, our role is not to force crypto into legacy definitions, nor to push innovators offshore. Rather, it is to allow market participants to operate and innovate subject to clear guardrails. And he says, if we stay true to the course, we can ensure that the US leads. Okay, so none of that addresses what's in the thumbnail, but his comments do. So if we come to his comments, it's a lot more of the kinds of sentiments I just read to you. But if you come down here in his comments, and this is right on the SEC website, there are a couple of pretty important paragraphs. So let me read this to you. Congress has given the SEC broad exemptive authorities under the 34 Act. We've got two Securities Laws Act, right? We've got the Securities Act, 33 Act, and the Securities and Exchange Act. That's the 34 Act. And he says, we have the authority to exempt people under the 34 Act, right? And we must use these authorities responsibly. I love it when they start a paragraph like that about crypto, because we've never heard them talk like this about crypto, right? We never heard Gensler saying, hey, yeah, we've got these exemptive authorities. We should use those for crypto. But Atkins here says, a thoughtful exemptive framework, and he's going to use the same language you just saw in his tweet, cabined, time-limited, transparent, and anchored in strong investor protections, could allow the markets to develop on-chain models and give investors innovative new choices. And drawing on input from market participants, we will be able to craft rules. Here we go. This is the important part, that distinguish between truly decentralized finance and the wide spectrum of centralized on-chain finance in existence today. This is a really important last sentence fragment here. We will be able to craft rules. He's saying we'll be able to, but he's really telling you this is what we're going to do. We're going to craft rules that draw a line between real DeFi and, he's saying, a wide spectrum of things pretending to be DeFi that are actually just centralized. He's saying just being on chain is not enough. If you're on chain, he doesn't care. He's like, there's real decentralized finance, real DeFi, and there's stuff that's just on chain and centralized. This is what TradFi was going to try to do. They were just going to try to go on chain, just put their software on chain instead of it residing on their servers and say, oh, we're a DeFi platform now. I guess you have to treat us just like all the rest of crypto. I'm JP Morgan, DeFi platform. This is how it was going to go. And our new SEC chair here is telling us that is not how it's going to go. They're going to draw a serious line between those two things. That line, that wall is going to be decentralization. This is not at all what TradFi wants to be hearing. Thank you, James Syracuse. Oh, wow. $20. Thank you, James Syracuse. Appreciate that. Thank you. Thank you very much. This is only the third super chat ever and the biggest one by far. So thank you very much. Appreciate that. James Syracuse says, Mag7 makes it easy to send crypto through these platforms. Thanks for the input last week. Yeah. So this is something that we have to look forward to in crypto, right? And I think we can, this does tie into what we're reading right now on the screen. So what the TradFi institutions of the world would love to do is they would love to just put their own proprietary software on chain and just do business as usual. Do things exactly like they've always done them and say, hey, we're a DeFi platform, so don't call us a broker dealer, don't call us an exchange, we're DeFi. But crypto can do real DeFi stuff. And Mag7 is going to come along and they're going to say, are we going to go with these TradFi rails? Are we going to make those rails available to our customers, which is like the biggest group of customers you could possibly tap into? Or are we going to go with crypto? Because if we go with these TradFi rails, all the old TradFi regulations are going to apply. If we go with the actual decentralized crypto rails, none of that's going to apply. So I think this is a really important distinction here. Yeah, Praetor Arsonist 69 says a CFI. Yep. And James is following up. They don't, but in the future. Yeah, I agree. They definitely don't. As of right now, they definitely don't make it easy to send crypto through their platforms, but it has to go that direction, right? Are they going to continue to choose TradFi and all the regulations that go along with TradFi, or are they going to send people to DeFi, right? If stable coins become the dollar of choice, everybody's already using digital dollars, right? Like I don't very often go to the bank and take an actual cash withdrawal. I do spend my dollars all the time. They're digital dollars. I never see them in paper form. They're already digital. It's very easy to imagine a world where it all just becomes DeFi. It all just becomes stable coins. And if stable coins are where we're doing all of our commerce, then it doesn't make any sense for Mag7 to go with the TradFi rails that are still going to be governed by all the TradFi regulations. But it all depends on how they regulate crypto, which is what we're looking at right here. D9U agrees DeFi will be the standard. So this next paragraph, also very important. So here's where he gives us some more detail. A durable rule book must recognize this spectrum. So this is the spectrum he's talking about of centralized on-chain finance, CeFi, on-chain CeFi basically, as Praetor Arsonist put it. A durable rulebook must recognize this spectrum without forcing square pegs into round holes. If we attempt to regulate decentralized protocols, so this is real DeFi, if we attempt to regulate real DeFi platforms as if they were centralized brokers, we will undermine the very innovation that makes them resilient and transparent. There you go. That's the SEC chair telling you they are not going to follow, at least while he's the chair, they're not going to follow the Citadel vision of the world we read in that letter yesterday. He is rejecting that view of the world. They basically said like, hey, we demand, it was like Citadel saying, very presumptuously, we demand you tell us who are going to be the intermediaries and whether or not these platforms are broker dealers or exchanges, right? It's like They're like, we're Citadel. We are super powerful. We demand you do the following things. And here, the chair of the SEC's saying, we are not going to force square pegs into round holes. We will not attempt to regulate DeFi as if they were centralized brokers. But he says, and here's where it gets worse for the Citadels of the world, but if we allow centralized intermediaries to benefit from regulatory arbitrage. So this is something we've talked about a lot on this channel. A lot of what's going on in crypto, here he's talking about TradFi, but a lot of what's going on in crypto has been regulatory arbitrage. We'll talk more about that in just a second. If we allow centralized intermediaries to benefit from regulatory arbitrage just because they operate on chain, we erode the principles of accountability and investor protection that have contributed to our global market dominance. Our task, as well as our responsibility, is to write rules that match functional reality. I look forward to working with my counterparts across the administration in the coming years to do just that. The SEC's role is not to resist the market's transition on chain capital markets, nor to force it into legacy definitions, as the language he used in his tweet, nor to push innovators offshore. Rather, it is to allow market participants to operate and innovate subject to clear guardrails that protect the public, ensuring that U.S. markets remain the most dynamic, transparent, and trusted in the world. So the most important part in this entire speech he gave is we will be able to craft rules that distinguish between truly decentralized finance and the wide spectrum of centralized on-chain finance in existence. And the reason he has to do that is because of regulatory arbitrage. So most of you already know what we're talking about here, but if you don't, regulatory arbitrage is the reason that a lot of crypto exchanges had to jump around from jurisdiction to jurisdiction back in the day. Like first they would like start in Japan, then they would like sort of move to the Isle of Man, then all of a sudden they'd be in Malta, then they'd be in Singapore, then they'd be, you know, in Dubai, in the UAE, and their banking their banking relationships are jumping around. They're banking, with some bank in a very, very small jurisdiction in Europe. Then they're banking with a bank in the Caribbean, then a different bank on a different island in the Caribbean. This is all regulatory arbitrage, right? The reason why they're jumping from jurisdiction to jurisdiction is because if they are a, US based entity, they're subject to US regulations. But if they're a Malta based entity, they're subject to Malta regulations, at least in their own minds. The long arm of US regulation often reaches into these other jurisdictions, kind of bullies those jurisdictions into, giving them their way, all those kinds of things. But what they're worried about here is regulatory arbitrage by TradFi. TradFi realizing the grass is much greener on the crypto side of the fence. So they just jump across the fence and they say, we're on chain. Hey, we're on chain. We're crypto. Don't look at us. We're Chase crypto. We're not Jamie Dimon, old school TradFi crypto. We're Chase, or old school, TradFi. We're Chase crypto, Chase on chain. So what he's saying right now, though, is like, that's not going to work. Just being on chain is not the distinguishing factor. It's decentralization. Unfortunately, he's going to have to apply this across the board. I would actually say for Cardano, it's fortunately. For a lot of crypto projects, it's unfortunately, because the SEC and the rest of the US government is going to be under a huge amount of pressure from Wall Street, from TradFi, they're going to try to erode. He even uses that word right here. If we erode the principles of accountability and investor protection. So this is exactly what TradFi is going to want them to do. Erode those principles. So TradFi is going to be pushing back on them super, super hard. And the only way they can resist that pressure from the TradFi world is if they say, hey, we're not picking on you guys. Decentralization is the line we're drawing in the sand, which he tells you right up here, that is going to be the line they're going to draw in the sand. TradFi is going to make them apply that to everybody. Just being on chain is not the distinguishing factor. That's not the thing that they're going to apply to everybody. They're already telling you that. You're not going to get off the hook just because you're on chain. You actually have to be truly decentralized. So here he's just talking about DeFi protocols. But guess what? This is the same strand of thought that runs through the Clarity Act, that's going to run through whatever market structure bill we get, that is going to run through all SEC regulation. They're not going to say decentralization is the line for, on-chain finance platforms. It's going to be the line in the sand for everything. And the thing that's really going to freak people out is it's going to apply to issuances too. The reason we know that is because that's what the Clarity Act tells us, right? The big thing in the Clarity Act is that even if you're not decentralized at the start, you have a certain period of time to become decentralized, to get out of being regulated by the SEC and having to do all the disclosures. Those public companies, when they have to issue 10Qs, quarterly reports, 10Ks, annual reports, 8Ks, event reports, when they have to issue all those disclosure documents, it's because they're subject to SEC disclosure. They're not doing it out of the good of their heart. They wouldn't be paying those attorneys to write those out of the good of their heart. They would just forego those costs. They're required to do that by the SEC because they're in the securities regulation world. They're in the SEC regulation world. And what the Clarity Act is telling you is that even if projects start out and they're centralized in the beginning, which they all are, right? Somebody issues those tokens in the beginning and they're distributed out to a large amount of people, and the project can become decentralized, right? Because the distribution is decentralized. Eventually, hopefully, governance is decentralized, all those things. But what the Clarity Act tells you is if that doesn't happen, then they go from, working their way toward the commodities world, the CFTC, which is much easier regulatory world. Instead of working their way toward that world, they fall into the SEC's world. That's the world of Qs, Ks, all those disclosure documents, right? They don't want to be in that world. That's very expensive, right? And it's like if you're going to be in the securities world, you can't just issue securities willy-nilly here and there. There's got to be a lot of disclosure that goes along with those distributions. So what's happened in the history of crypto so far has mainly been a lot of this regulatory arbitrage, right? It's like the same guys who would have issued penny stocks looked at crypto and they said, hey, we can do the exact same thing in crypto. We just call it an ICO. We just call it NFTs. We call them meme coins. But we're going to issue something to people. They're going to hope the value of that thing goes up. We're going to dump our share of it on them, and then we're on to the next project. That's the way things have worked in the penny stock world. Not always. There are good projects come out of the penny stock world occasionally, but that's the way it's worked in the penny stock world. But they looked at crypto and they said, oh, we can do the same thing. And apparently none of the security stuff applies. So what Atkins is telling you here is that actually, in order to be treated as part of the crypto world and not a part of the securities TradFi world, you've actually got to be decentralized. And I think a lot of projects are going to be on their knees wishing this weren't the case. Obviously, this is Cardano over here, standing here, looking out at the world, knowing what it's always been. A lot of projects are going to be like, wait a second. Real decentralization was never required. We just had to say we were crypto and talk about decentralization, and that was always enough. But starting pretty soon, when all these laws get put in place, faux decentralization is not going to be enough. Actual decentralization is going to be the only thing to get you out of that TradFi world. And trust me, in the TradFi world, you're not going to be able to. If you fall into the TradFi world, into the securities world, you're not going to be able to just issue tokens and with no disclosure, nobody even knowing who the team is, nobody knowing when the team is going to be dumping, all of those things that go along, all the abuses that happen in crypto. None of that stuff is allowed under normal SEC regulation. Sure, insiders can eventually sell, but there's a lot of disclosure that goes along with that. A lot of things about the qualification of investors. There are there's a lot of regulation you have to abide by. This is going to happen to a significant portion of crypto because they've just been pretending to be decentralized. They didn't actually build for it. And they've already built so much on top of their decentralized foundations. They're not going to be able to rip it apart and rebuild it in a decentralized fashion. They've already built too much on the wrong foundations. So a significant chunk of crypto is going to be like our astronaut on the right there, on their knees, amazed that decentralization was actually required after all. D9U says DeFi will be the standard, but institutional adoption will want guardrails. So CeFi will be bigger, picking a few true DeFi projects as collateral or investment. Yeah, I mean, TradFi has all the customers. They have all the customers. We're tiny, right? We're starting to do big volumes. You're starting to see like certain parts of crypto doing numbers that kind of, start to rival certain TradFi rails. But TradFi is still huge. They have all the customers. That's going to change. That's going to change over the next decade. And it won't change like all of TradFi dies and we're just like the champions over here. TradFi will start melting into crypto and crypto kind of melts into TradFi. And we're kind of, some of the same players will be over here and some of our things will be over there. But it's over the next decade, things are going to change. Yeah, I mean, this is what we get when we have a pro crypto head of the SEC. Like it's a very, very different world for sure. Dr. Doak says, howdy, joining late, unrelated to this current discussion, but I listened to the CZ versus Shift debate today and I spent the whole time thinking Cardano was better than both. I haven't heard it yet, so I can't comment. I definitely can't comment, but I'm very curious. I'm very curious to hear that. Very, very curious. I mean, I kind of already know how it's going to go. I mean, like CZ is no fool. CZ is very smart. Peter Schiff is also no fool, but he's kind of like taken up this heel position. Somebody pointed out, I can't remember who I was watching, but somebody pointed out the other day that Peter Schiff is kind of a genius because he's getting himself invited to Bitcoin conferences, right? He's getting I assume getting paid to come to Bitcoin conferences and speak. By being the heel, he's so effective as the heel that they'll actually invite him to come to the conferences and people are really interested in what he's going to say, which is hilarious. Prator Arsonist says Wall Street on-chain would be chaotic for retail. I wonder how they deal with flash crash. TradFi has circuit breakers for such occasions. They better be active in my sleep. Yeah, so I mean, these are important sentiments, right? Because this is the difference. They can't really do, and this is something that even Caitlin Long has pointed out previously, very persuasively. TradFi isn't going to be able to do all the same stuff on the chain that they've been doing, and Caitlin Long doesn't think they really understand that, right? Like settlement times, just banks. Settlement times for banks are like overnight, a day or two, in some cases. Settlement times in crypto, we're like pissed if it's 5 minutes, right? Banks aren't going to be prepared to handle that. So they're not going to be able to do all the stuff on chain that they would normally do in retail TradFi. It just doesn't work in crypto. Like you point out, flash crashes. How are TradFi circuit breakers going to handle that? They're not. It doesn't work. So it's not going to be this. I think a lot of TradFi thinks that they're just going to like jump on chain. It's like just in fact, somebody made the point much better than I could right now. Bill Hughes, who's a very good crypto attorney, was a lawyer at Consensus, also the DOJ, put it like this. Chair Atkins indicating today that the centralized on-chain financial protocols are going to be regulated differently than DeFi protocols. Let me read that again. The centralized on-chain protocols are going to be regulated differently than actual DeFi protocols. And no wonder that they would be. You aren't decentralized by running your software on chain rather than AWS. Note the call out of regulatory arbitrage. So everybody knows what TradFi is going to try to do, regulatory arbitrage. They're going to try to jump the fence and just be like, oh, I'm on chain now. I guess those regulations don't apply to us. But the SEC is already expecting that. And the actual line is not going to be on chain or not. It's going to be, are you decentralized or not? Because just moving your code base off your server and on chain is not enough. ZC so smart and thinks so much. He evaporated his hair and bulges his forehead. Oh, you mean CZ? CZ. Yeah, I think it's probably, man, running the biggest exchange in the world is probably pretty stressful. And then you get sent to jail. Then you get sent to jail. I mean, the dude grew up in Canada, and he ran his business, from Asia theoretically, and he still got sent to a US prison over, over a business run from Asia by a Canadian. I think he's had there's been a lot of stress. I think the last 5 years have been pretty stressful for him. He also is in control of a tremendous, tremendous amount of money. So I think we'd all be shocked if we knew exactly how much money CZ controls. But yeah, I think it's this has been something that I'm sure has been posted a million times. Some variation of this has been posted a million times in crypto. The astronaut in front realizing it's decentralization, the one in back already poised to assassinate him, saying it's always been decentralization. This is just like the kinder version of that, because I think we're not trying to assassinate each other in crypto. But as we move toward decentralization, TradFi is going to be focused super heavily on tokenization of the securities world, because that's their world. So when they say tokenization, that's what they mean. But there's something else going on that you could also call tokenization. And that's the real world asset thing, the whole real world economy thing. So here we see a post from Daniel Friedman of Palmyra and Palm Economy saying, just recorded some voiceover for a training visual we're creating for Nigerian farmers being onboarded onto Palmyra. We'll see in a second, they're farmers. The team is on the ground in Nigeria. The level of real world impact of this project is going to achieve is giving me goosebumps. This is what we're here for. So while Wall Street is fighting with the SEC, trying to pretend like they are decentralized, all of that's going to be going on. And meanwhile, what I'm hoping is that all of us in crypto are focused more on stuff like this. And let me just provide a little caveat here. Just like I've said probably 10,000 times about World Mobile, I don't know anything about the tokens related to these projects. I have no idea. I don't know anything about the tokens, and I'm not saying anything about the tokens, but the missions of projects like these, like World Mobile, connecting the unconnected, and the mission of projects like these, Palmyra and the Palm Economy, when I look at what they're actually doing, this is something I can very much get behind. So don't take this as any commentary on the tokens. I don't know anything about the tokens, but I love what these guys are doing. Look at this. Look at this. So here's a video, day one of onboarding Nigerian cocoa farmers on Palmyra. So very interesting. See them. I know you guys can't hear the audio, but this is a part of the Cardano ecosystem in Nigeria, onboarding these cocoa farmers to a use case that blockchains are very good at, right? Since the start of crypto, but since the start of smart contracts, one of the things that everybody's realized blockchains are very good at is stuff that looks like the provenance use case, right? And in this case, it's not, exactly the provenance use case. Like you could argue the provenance use case is like, proving that the sparkling wine is from Champagne and not from somewhere else. It's from this district. But this is something very adjacent to that, something very similar to that, that blockchains are very, very good at. This post says, Nigeria is entering a new era of fully traceable cocoa. Boki LGA in Cross River State has officially announced our joint digital empowerment and traceability program, marking a major step toward the country's first fully EUDR compliant cocoa exports. Full article in the description. So, what they're talking about here is that we have these crops, right? We have certain crops that are kind of commoditized around the world, and some of them have resulted in deforestation. So here's the article on the website of the Boki Local Government Council. And if you wanted to know exactly what this is, we'll see how quickly this will. Let's jump over here. Welcome to Boki Local Government. Boki Local Government Area is located in the lush rainforest belt of Cross River State, Nigeria, renowned for its rich biodiversity, fertile agricultural landscape, and resilient people. Boki stands as a vibrant hub of culture, nature, and potential. Our communities are deeply rooted in tradition while embracing sustainable development and progressive growth. So if we go back to that article, we can see what's going on here. So this is a traceability program. The administration of Boki Local Government Area is pleased to announce the commencement of a major farmer empowerment and digital traceability program scheduled to take place from December 4th to 14th, 2025. This is being implemented in partnership with Palmyra, a global blockchain traceability platform, and Mangrove Agro Allied Services. This program is part of the vision initiated earlier this year by the executive chairman of Boki LGA following the first engagement with Palmyra and Mangrove in May 2025. The chairman recognized the need for Boki farmers and licensed buying agents to prepare for the new EU deforestation regulation, which requires traceability of agricultural commodities entering the European market. So the purpose of this program is for them to fulfill the requirements of the EU deforestation regulation, right? They need to know that the cocoa making its way to Europe isn't resulting in deforestation of this rainforest in Nigeria. This is a perfect use case for crypto because blockchains are the most transparent ledger you could possibly concoct. And like we were talking about earlier, when things are totally transparent to the entire world, they're auditable by anyone in the world. So they're perfect for these types of use cases, provenance, tracing, whatever we want to call it. In this case, it's about, probably some kind of certification, and it's all related. It's all in the direction of avoiding deforestation. So this is the kind of stuff that I think crypto should be focused on. There's going to be a lot of money in the tokenization of securities, but a lot of that is just going to be TradFi trying to engage in regulatory arbitrage, when in fact, this is the kind of stuff that probably the crypto native people should be focused on. Putting real world business on the blockchain. Like, we all know why we like cocoa. We use cocoa to make chocolate, and it's grown in places that have these lush, beautiful forests. And while we like that chocolate, we also don't want it to result, we don't want our damn chocolate bars to result in deforestation of these lush rainforests. So this is a great use case. Again, I don't know anything about any of the tokens related to any of these projects, Palmyra, Palm Economy. I don't know anything about those tokens, but I love this kind of mission. I love them bringing this kind of stuff onto the blockchain. Severed Tom Cardiac says, I bought into Palm when they were launching, just holding and staking. Cardano Universe, what's up? Yep, that is a real world asset. Every big investor like BlackRock talking real world assets. Yeah, I mean, BlackRock understands that real world assets are going to come on chain. Simultaneously, all of TradFi will be very interested in the tokenization of securities too. Rulo says blockchain is perfect for this. Even if companies disappear, the product might be in the market for years. You need to be able to trace it. Exactly. Like, this article is talking about the licensed buying agents. Like, the licensed buying agents, I'm guessing, they're exactly what they sound like. They're the ones buying the cocoa from the farmers. I'm sure the licensure is periodic. Like, it's probably annual. So you might have somebody who's licensed as an LBA 1 year in this part of this Boki local government area, the Boki LGA. You might have somebody who's licensed for a year, and you could try to require them to keep a record of which farmers they were buying from, so they could somehow use that to try to trace whether or not there's deforestation related to the production of these agricultural commodities. But the licensure might change. That buying agent may decide he doesn't want to be a buying agent anymore. Maybe he didn't make enough money last year, so he's no longer licensed. And if he's no longer licensed, it's pretty hard to get him to keep those records, right? You could say, well, he should have to, provide the records to, some kind of a government agency in this Boki LGA. Obviously, that hasn't been working, because they wouldn't be seeking out this blockchain solution for the same thing if that was working. And like is being pointed out here, on the blockchain, it's there forever. Whether this guy retires from being an LBA or not, that's going to be on the blockchain forever. Cardano Universe says real estate. Yep, tokenization of real estate is a huge, huge use case. The problem is, in the US at least, the problem with tokenization of real estate is the county recorder's offices. Title in the US is a very old-fashioned business, and it's all, kind of based out of the county recorder's offices. This is problematic. County governments are not in the vanguard of high-tech organizations. Let me put it that way. Interestingly, Schiff mainly talked about tokenizing gold to give it more real-world use, which is hilarious, because the easiest place to tokenize gold is somewhere that they have smart contracts, which is not Bitcoin. So even though Bitcoin loves to call itself digital gold, the best place to actually create digital gold on the blockchain would be somewhere that natively has smart contracts, which is not Bitcoin. So it's kind of hilarious. Peter Schiff, even though, he kind of acts like he's slumming it when he's dealing with crypto people, but it's even worse than that, because the easiest place for him to do that would not even be Bitcoin. So he would super be slumming it. Cardano versus gold shiller Schiff. Yeah, he's definitely in the business of shilling gold. That's for sure. Jordan for America, thank you for joining. Thanks for joining. Appreciate it. So moving on, this is kind of entertaining. Usually at the end here, I like to do robbery forest type segments, but tonight we've got something even almost more entertaining. So we started seeing these messages pop up last night. We are aware, this is the Prism Ethereum client. We are aware there may be an ongoing issue with Prism nodes. We are investigating at this time. We will provide updates here as we have them. This poster says, network still up, but this is a big deal. This is missed slots on the Ethereum network. Do you remember how much glee and kicking of a downed Cardano there was when we had our little node episode where our chain kept running, but certain versions of the node were having a problem? Everybody in crypto jumped on us. And down here, you see the solution. This solution should address the ongoing issue with mainnet. If you're running Prism, please update. This is exactly analogous to what happened in Cardano. When it happens in Cardano, everybody dogpiles on Cardano. It's like one of those videos on WorldStar where one dude goes down and 12 dudes are kicking him while he's on the ground. That's what happened to us last week. And yet here we go. Something exactly analogous happened in Ethereum. So here's another post. Turns out this data is accurate. We just had 23% of the network fall off due to a bug with Prism. That sounds very similar. It's a different percentage of the network, but what was it? Within 30%. So very analogous situation. If Lighthouse had had the bug instead, and you can see down here, this is Prism with 22.71% of the network. Lighthouse that he's referencing has about half, 48.47%. And they've got, quite a few. They've got some node diversity going on here, but really they only have 4 node versions, 4 different nodes. Basically, I'm sure there's multiple versions of these nodes, but 4 different nodes that are in the double digits. They've got Nimbus, Teku, Prism, and Lighthouse. Those are the only ones above 10%. The rest of these, Aragon, Lodestar, Grandine, and whatever the other ones are, those are all below 10%. So they've only got 4 that are above 10%. But he says if Lighthouse had had the bug instead, then the network would have lost finalization. Not good. So if you're a node operator, especially a big one running Lighthouse, it's time to switch to a minority client. Do your part for Ethereum client diversity. So this has happened before in like every blockchain. Every time there's a bug in any node, everybody in that blockchain ecosystem will encourage everyone to move out of the biggest node and move into other smaller ones. This will happen once we have more node diversity in Cardano. Whenever there's some kind of a bug with the node, everybody will be like, please jump to, and then they'll name all the nodes that don't have as much adoption. So kind of interesting. Vitalik commented on this. Nothing wrong with losing finalization once in a while, in my opinion. Finalization is for when we're really sure a block won't be reverted. If finality delays a few hours when a major client has a bug, that's fine. The chain keeps going during that time. The thing to avoid is finalizing the wrong thing. The original poster says, I don't disagree. My main point was that we have too much concentration in one client now and should work to lessen that and encourage node operators to run software like those while also having sufficient backup infrastructure. It is kind of insane that pretty much every node operator that was running Prism did not have a fallback. Even more insane for professional node operators. Being vocal about client diversity is the main thing that has been shown to move the needle here. So I'm just doing my part. So this is very analogous to our situation. This is just something that happens in crypto. And guess what? If it had been anything like what happened in Cardano, where over 50% of the nodes were running the version that had a problem, it would have gone down very differently for Ethereum. Hey, did you see the Binance guy gave Schiff a big, so CZ gave Schiff a big gold bar? That's pretty hilarious if true. Dolph B. Wolf, good morning. Thanks for joining. Omar Wright, let's go. Let's go. Thanks for joining. So here's something else. Let's see. Here's something else that I think people should be aware of. This is something, it's a feature in other chains. Yeah, this is something I've talked about many times on this channel. So people have often asked me, why are you not more excited about Hydra? Why aren't you more excited about Hydra? And I am excited about Hydra. I'm glad we have it. We should have it. I'm very thankful we have it. However, it is just a state channel. And if you came up in Bitcoin like I did, you're already familiar with state channels because it was all the rage back in the day. Back in the day when state channels were first being discussed, it was all the rage because it was kind of the only scaling thing that anybody wanted to talk about. It was like the only thing that was possible, really, as a practical matter. So it sounds like maybe Schiff gave it to CZ. Did Schiff give it to CZ? If CZ was the one asking if it's real? That's what I'm guessing, which is a pretty funny comment by CZ because you don't have to do that with crypto. You don't have to ask if it's real. You can just tell cryptographically, if it's real or not. But with gold, you have to do a bunch of different tests. So this is the thing about state channels, and I'm kind of surprised that people don't know this. We've actually talked about this many times on this channel about state channels in general. So this is Phil saying, this is the typical reaction I see from people when they learn about the security guarantees provided by Hydra applications. And when he says the security guarantees provided, he's mainly talking about the ones not provided. So the reaction was, wait, what? So here's what he says. Hydra only gives you L1 equivalent security if you are a participant in the head. if you are running a node as a participant in that Hydra head. So you only get the same security guarantees as you would on the L1 in a Hydra head if you're running the Hydra head. If you're not, your funds are in the custody of the head participants. A unanimous quorum can spend them however they want without your consent. This is a state channel, guys. This has always been the case with state channels. This is how they work. This is how they've always worked. And this is why I've never been super excited about Hydra. Like I said, I'm glad we have it. Like, we needed state channels. All along, it's been good we have them, but I've never been as hyped as people wanted me to be for this reason. Delegated authority Hydra topology apps. I, as a user, am not a participant in the Hydra head. I'm not running a Hydra head. Then I lose custody of all funds that I deposit into this application. The Hydra head participants can, with unanimous quorum, do whatever they want with my funds. This is the case. If you are a direct participant, direct participation Hydra topology dApps, I, the user, am a direct participant in the Hydra head. I'm running a Hydra node that is a participant in the Hydra head deployment for this application. Then I have full custody over all funds that I deposit into this application. The Hydra head participants cannot steal my funds, even if they all collude against me, because as a direct participant, my node will not consent, and thus unanimous consent cannot be reached. This has always been the case, guys. This has always been the case. So then it gets a little nuanced, and I kind of want everybody to understand the nuance here. So here is the kind of, like light, polite rebuttal from Dory. So Dory, as you can see, shows ex arbitrum ambassador. So Dory is coming in from a different ecosystem. That's going to be important in just a second. We'll talk about why. I don't think this is something we need to worry about. The risk of losing custody because I'm not a Hydra head participant applies just as much to every dApp and every layer 2. In a second, we're going to examine if that's actually true or not. Even the dApps we use every day can redeploy contracts or use upgrade functions to drain user funds if they want to. So the assertion here is the dApps we use every day can use upgrade functions to drain user funds. And most layer 2s can easily reorder transactions, freeze withdrawals, or block specific accounts with malicious intent. And that probably is the case largely when you come from other ecosystems. Here, remember, ex arbitrum ambassador. In other words, the risks people point out in Hydra aren't unique at all. The same risks exist in practically every dApp and every L2. If someone says they can't use a Hydra-based application because of this risk, then by the same logic, they shouldn't be using any dApp or any layer 2 either because the risks are the same. My point is that anything built on top of an L1 where there's a new layer or a service inevitably requires some degree of trust, and the market chooses based on that trust. This is also why scams, rug pulls, and contract exploits are so common in the space. Trust becomes the most important thing. So this is probably largely true in other ecosystems. And this is a good point, right? Like, how many people actually examine the code of the smart contracts underpinning the platforms they're using, right? Dory is rightfully pointing out any of these could be a lobster trap, right? It could be a lobster trap if the smart contract provides for the people running the platform to upgrade functions to drain user funds if they want to. They might have that magic switch. Oh, we're upgrading. We're also draining your user funds. Not that a trustworthy platform would ever do this, but Dory's pointing out that that could be done. However, I pointed out that this probably applies more to other ecosystems. And here, Pi, who famously would be the guy who knows everything there is to know about SundaySwap, the first AMM to launch on Cardano, he points out something very important here. Note that SundaySwap doesn't have the ability to upgrade contracts like you describe. I can't speak for other dApps. So he's saying, hey, that's not the case with SundaySwap, right? I think it is legit that Dory is pointing out that there are layer 2s. Dory says even the dApps we use every day, and certainly SundaySwap is used every day in Cardano. Is not the case with SundaySwap. Pi would know. I definitely trust what he's saying there. But Dory's pointing out a lot of dApps and L2s can do exactly the same thing. They're actually not trustless. You actually do have to trust them. But this piece is a piece, so that's something to think about. And I would definitely encourage every DApp on Cardano, chime in here. How much is this true of other dApps? What dApps? This is something we should know as an ecosystem. Like, what other dApps can make this claim? SundaeSwap is jumping up and saying, hey, that's not the case with us. But, if I had to guess, I would guess there are definitely other dApps where Dory's commentary applies. And it is the same lack of trustlessness that Phil is describing in Hydra heads, which we all knew about. If you knew anything about state channels, you already knew that's how they work, right? Because that's how they've always worked in crypto. And they've been around for a long time in crypto. It's not a new innovation. Some of the stuff, the isomorphic nature of Hydra heads is a new innovation, kind of cool. But state channels have always worked that way. I would strongly encourage other dApps and any kind of platform in crypto to jump in here and let us know. Can you do what Dory is saying, or are you more like SundaeSwap, where you cannot upgrade the contracts like is being described? So I think that's a pretty important thing. And it's something that not a lot of people know about. I think a lot of people in crypto, they sort of use various platforms, and they don't necessarily have any idea about what the platform runners, the entities behind the platforms, can actually do with those platforms. And certainly what Dory is describing is the case with some platforms. So got cooked there. Yeah, I would love to hear from especially all of the, all the platforms that have significant total value locked. Like, the people who've locked their assets in those platforms deserve transparency on this, right? It's like very commendable that Pi jumped up and, said what he could about SundaeSwap, but the rest of the platforms, they can also say the same. I think probably some of them don't want to say, because they do have this upgradability feature. So I think all the people who have value locked in those platforms deserves to know if that's the case. It's not necessarily bad. I mean, it could be bad. It's just the difference between a trustless platform and a platform that must be trusted, and the people using it deserve to know the difference. S. Walker says, Don Julio kicked Puppers last night on his birthday. Saw him slap the poodle in the morning and light a cigarette. Oh no. Puppers has been engaging in domestic abuse because of the Don Julio. That is not the outcome I was expecting. Hopefully this doesn't become I won't comment on this. I won't comment on this. That is not the outcome I was expecting. I'll put it that way. Open source should be a must for dApps using Hydra. So yeah, I agree. I think we could say open source should be a must for all dApps. The unfortunate thing about state channels is we already know that no matter what, that's going to be the case with state channels. Any dApp that there's any value locked in, open source should absolutely be required. And it's so that we can figure out things like this, right? Like, the reason you want open source is so you can look through the code and see if the kind of, redeployment or upgradability exploits like Dory's describing are there, right? You want to be able to look through the code and see what the, what backdoors the people running that platform have. Is there a key they can use to upgrade the platform, or are the contracts like Pi is describing, they can't be upgraded? Like, the code has to be open source for us to be able to verify those things. 8 Eclipse says, will night tokens be automatically dropped in your wallet, or will the drop only happen once we take an extra step to claim the night? Yeah, so I went through it earlier in this video. Go watch the beginning of this video and I walked through the steps. Just before, at some point before night tokens go live on December 10th, the claim portal on the Midnight Glacier Drop website is going to go live. You'll be able to see your your thaw schedule. They're calling it the thaw. You'll see your thaw schedule. Then you'll know when your addresses will get, for each address, you can see the thaw schedule, and you'll know when that address is going to get its first 25% tranche. The 3 subsequent tranches will be of 25% each, will be 90 days each after that. And then you'll actually have to pay the ADA, gas fees to get those and initiate the claim. So Poodle. Oh, S Walker's saying it was consensual. it was consensual. Okay, I feel better. I feel a little bit better about it in that case. If it was truly consensual, I'll assume it was, and then we don't have to think of it as a domestic, a canine domestic situation. But I hope that's the case. James says, do we have to do another claim, or is that only for the scavenger mine? Nope, we have to do another. We'll actually have to initiate the claim like I just described for ADA Eclipse. So when it goes live, when the claim portal goes live, we'll take a look at it, and maybe we can. But it's going to give you pretty good instructions. I think it's going to give you very good instructions on how to do it. So I think it's going to be a lot like the other phases of the Glacier drop. And if you go to that website, you'll be able to walk through it. Let's see. I ate you before. That's a pretty good username. Hey, I'll just stop by to say hi. I'm going to have to watch full episode later. Taz out. Thank you for joining. Appreciate it. Thanks for joining. Let's see. Ain't open sourcing also gives black hat hackers knowledge on how to break in and exploit, especially if your DApp ain't that popular or your DApp don't give bounty. Yeah, so it's kind of a double-edged sword in that sense. Security experts would probably have a lot more to say about this than I would, but it's a double-edged sword in that black hats can more readily examine your architecture. But what we see is that there are hacks of non-open source protocols all the time in the traditional world, right? It's like all those companies that get hacked all the time, they're all closed source. And the black hats still figure out how to hack them. The good thing about open source is that white hats can look at the architecture and try to identify exploits simultaneously with the black hats. While for white hats to do that, if it's the architecture of some company, like white hats can't really probe their security, legally as easily, right? It's like even just to begin the process of identifying the exploits, you sometimes have to, do things that are like illegal. So only the black hats are going to be doing that. So the first person to discover the exploit in a closed source architecture, might be more likely to be a black hat, because just to probe the security, you kind of have to do things you're not supposed to be doing. Whereas open source, everybody can see it. So the white hats can see it too. And you're right. Like obviously, providing bounties to identify exploits is obviously that's going to encourage white hats. Like, why would they do it? Out of the goodness of their heart? They're going to have a lot more goodness in their heart if there's a bounty attached. So, okay. Bindocam, sorry. Yeah, we're trying to do it the same time every night, Sunday through Thursdays. So just know we go live. I try to go live the same time every night. If I deviate from that schedule, it's going to be because something emergent happened or something I can't avoid is happening, something planned I can't avoid. But I haven't really deviated much from that same time I go live every night. So it looks like a different time. If you're looking at the X posts I make beforehand, it looks like a different time just because I finished preparing the thumbnail and the intro and everything at a different time every night. So it goes live and it'll say like, new episode in 57 minutes, new episode in 2 hours, new episode in 10 minutes. But actually the time that we start is consistent every night, Monday through Thursday. So, okay, I think that is about all the news for the week. I think this is a pretty big deal though. The crypto space is kind of sleeping in a lot of ways on what's actually happening with this, right? We haven't yet gotten to that point where the crypto ecosystems who are not decentralized, the ones who are not decentralized, we haven't quite seen them like on their knees yet because the regulations haven't hit yet, right? There's been no reason for them to be on their knees because the regulations haven't hit yet, but the market structure bill is going to pass through the Senate. We're going to get something, right? And every iteration that's been seriously considered in the House, the Summit, the Lummis, Gillibrand sponsored drafts, they've all had this same notion in them. Decentralization is the golden key. Decentralization is the thing that gets you off the hook for all the SEC regs. The SEC regs are not going away. Nobody's saying, let's delete the 33 and 34 Act. That's not going to happen. They've been around for over 90 years now. That's been the law of the land for 90 years. They're not going away. But like Atkins said, they have immense exemptive powers. Decentralization is the golden key that gets you into those exemptions. And a lot of the crypto space is sleeping on this. They don't realize yet that they needed to have been building for this 5 years ago, right? 8 years ago, like Cardano was. Cardano's been building for this for 8 years, right? It's like Voltaire has been a planned era in the development of Cardano forever. Since almost all of us have been a part of Cardano, Voltaire has been a thing that's been talked about because Cardano was building for this. It's right. It's like we wanted to have decentralization in terms of validation and actual governance. Who can claim that? Who in the top 10 can claim that? Who has that? Praetor Arsonist says hopefully they'll use the EDI, the Edinburgh Decentralization Index. That would narrow down qualified blockchains. Well, I mean, the EDI is peer-reviewed, academically, rigorously peer-reviewed. So if you're not going to use the EDI, you've got to choose something equally robust or it's going to look pretty feeble compared to the EDI. But even if you don't choose the EDI, I mean, you're going to have to talk about Nakamoto coefficients, right? You're going to have to talk about MAVs. You're going to have to talk about all of the things that would, scoring well on those kind of metrics are the things that would boost you in the Edinburgh Decentralization Index. The great thing about not doing vanity science, like we could have easily had had IOG or the CF come up with a bunch of like fake vanity metrics that make us look awesome. But the cool thing is we always planned on doing the real science thing, doing the real peer-reviewed, science, doing the EDI. We always planned on meeting that measure. So we didn't have to do the fake vanity metrics and make us look good. We built for real decentralization. So we don't have to do the fake vanity stuff. We can do the real stuff. And I think, if everything goes well, the law will align with real decentralization. The only problem with that plan is that there's a huge amount of money in non-decentralized blockchains. And all that money is going to push really hard to get those blockchains included in the definition of decentralization. But the great part is there's a lot of people who hate crypto and they're going to attack the crypto regulatory regime wherever it's weak. And if the definition of decentralization is really weak, then the enemies of crypto are going to attack that because they're going to want these big money, big market cap ecosystems to suffer because they hate crypto. I mean, they're called the anti-crypto army for a reason, right? They hate crypto. So if they can point out that the definition of decentralization isn't really a good definition of decentralization and some gigantic big money ecosystem, would get pushed out because of it, they're gonna push on that. They're gonna put pressure on that, which is, I hate to say it, but actually good for Cardano. Like, I don't want for any ecosystems to get, punished by the regulators, but it's actually good for Cardano if we have a pretty robust decentralization threshold. So what we actually end up with is a matter of, smoky backroom negotiations in the Senate. Because, I mean, the Senate's going to have to agree to something in the Senate. Then it's going to have to go back to the House. Then it's going to have to eventually make its way to the president's desk. And the president's going to sign no matter, he's going to sign whatever, right? He's going to be cool with whatever. But the senators all have to be on board for it. Then it's going to go back to the House, and the House is going to be cool with it. So, it's very possible we do end up with a robust definition of decentralization, just because the anti-crypto senators want to make it tougher on crypto, which ironically would be good for Cardano, because we can meet the most robust requirements, the most robust thresholds for decentralization. That'd be nice. ADA back to number 3 spot would be fantastic. Lone Eagle, thank you for joining. ADA Eclipse says ETH can be one of our partner chains. Then that would be fantastic. I don't think that's ever going to happen. I mean, they can be like partners of us, sort of, in the sense that they want to use Midnight for privacy. I don't even know if that could happen. Obviously, that's like sort of the plan, the aspirational goal. But I hope it happens. S. Walker says the poodle just came by. She's pregnant and wants 5 smoky bones per month. He told Puppers to hire an attorney. Yep, that's on Puppers. That's on Puppers. You got to pay the price. It's unfortunate, but yep, even for young male dogs, there's a price to be paid for those nights, those long nights like that. So anyways, this is kind of an evolving trend. This is going to be an evolving trend. We're going to see this go down over the next 3 years in this administration. And it's like I keep saying, this could be the most pro crypto SEC we ever see. So it's very possible the next SEC is going to be tougher and stricter. So I have a feeling that this new regulation, everybody's looking forward to common sense regulation. But what they're not recognizing is that common sense regulation is going to require decentralization. The head of the SEC is already telling that. So a lot of people, not a lot of people, but a lot of ecosystems that did not build for decentralization are going to suffer a little bit. All right. I hope everybody had a great week. I hope you're looking forward to a great Friday and a great weekend. Jay Marie just got here. No worries. Come anytime. Come late, come early, come whenever. 8 Eclipse says good night. S. Walker, like that. James is leaving. He says, night. I'm leaving the mines now, and it's -1 degrees out. Pucky Hawk says dogs could fill a whole episode. I have one named Smokey the Bandit and one named Gizmo. Very good 70s and 80s references there. Smokey the Bandit, Burt Reynolds. I believe that was late 70s. We used to watch it on rerun all the time in the 80s. Gizmo, definitely a part of my childhood. But anyways, I hope everybody is going to have a great Friday. I hope everybody's looking forward to a great weekend. If it's as cold as it is for James, I hope everybody is doing fun winter stuff this weekend, or they're just staying inside. Ciao, Rulo. Thank you for joining. M. Marsh, good night. Puppers already has a new lady coming over. That's right. Everybody should definitely stay decentralized. But I hope everybody has a great weekend, and I will talk to you soon.